As inflation eased things down, where was the economy looking for 2024? Where your financials going to be? Are we going to see a rally in the stock market? Although I don't have the exact answers to all of these things because I cannot predict the future, but based on historical data, there's some things that we can look at to make some analysis and assumptions. So far, with the Fed's hiking interest rates so much, it seems like it's starting to ease down a bit. As we could see from the peak of 2020, mid of 2022 to 2023, inflation was at its peak because interest rates was so low. By October, right now we are in November of 2023, it's starting to flatten up. The Feds have decided to pause rates at the last session that they had, and it might be paused again for the remainder of the year. It might stay on pause for quite a bit. As long as they can see that they can keep it under control, that it's not spiking inflation, then they're feeling okay. But their target is to get it at under 2%, about 2%. To make things as leveled out and as easy as possible. The stock market has been reacting to the rates being paused. It has been taking a rally. As we can see, the Dow, just looking at from last month, right? It bottomed to around 32,500 to now it's at 34,000, about 2,000 points. SP 500, it was at about 4,000 to now it's 4,500, about a few hundred points. And then the NASDAQ, it was for around 12,600 to now being about 14,000. NASDAQ experienced the most rally. Again, that's where a lot of the tech stocks are aligned inside of the NASDAQ. Therefore, you will see an increase when it comes to that. And I've seen that surplus happen, as well as some crypto-linked stocks. As for me, Grayscale is the one crypto-linked stocks I have across my retirement. And that's one of the ones I believe in. The way they stabilize things, I just believe in how they're strategically setting themselves up for success in the future. Quite a bit of stocks experienced some increases. Like today, at the time of recording this video, we see all green. Everything is green. Semiconductor, right? Look at it from the past month. So from October, it went down a little bit to 245, right? The earlier end of October to early November, and now it's at 293, about 60 points. But if we look at it from 1 month ago, it's only increased about 3%. But we see it did take a decline around the end of October. Airbnb, 1 month, right? They're all following similar patterns. Around October 31st, they were low, and it experienced that slight increase. And if we look at it across 6 months, they're actually up 20%. The stock market is reacting, seems to be positively across that the Feds have paused rates, and inflation seems to be easing down a little bit. But we are not out of the bubble yet. One last indicator I want you to look at, the unemployment. So unemployment is still low compared to its peak, right? During COVID, it went pretty high and then it dropped down low here. It's still pretty low. One of the things Fed say, which boggles my mind, is they say they want to see unemployment numbers spike in order for them to feel okay about either decreasing the interest rates or feeling more comfortable, which is insane. It's like you want people to be going through a depressing time in order for you to feel like you can decrease prices of mortgages. But it has worked in the past, right? They're causing the market stir in order for them to stabilize, cause that disruption, and create the opportunity for the next cycle to happen. So I completely understand part of that. Crypto did experience a rally. And I'm going to start with Bitcoin because that's usually the indicator. Bitcoin from last month to now is up about 10,000 points, 32% as we can see right here. Ethereum, it's up 27%, right? Not as high as Bitcoin. And then we could take a Litecoin, it's up about 14%. I own a lot much more Litecoin. I still have the 4 Ethereums that I purchased from a long time ago. And let's look at some of our memes. Like Doge is up 21%. Matic, which I don't think is a meme because they do have really good technology, they're up 75%, which is insane. It was down to 50 cents a piece, and now Matic is about 90 cents a piece. I have a lot of Matic, Cadena, these cryptos that I'm watching right now. I own quite a bit of them. So we can see the market is starting to react a little bit. I'm half and half diversified across my portfolio. Half of my proceeds is in stocks and half is in actual crypto. My retirement, the one that I'm managing by myself, half of it, because I cannot buy crypto directly in there, is inside of crypto-linked stocks. And then the other half is into regular stocks. Like I own quite a bit of Netflix. I bought around $190 a piece. The whole movie strike thing is becoming more to a close. So that might also spike interest in the stock increasing. But they're up 26% from last month. Year to date, they're up 52%. From the price that I bought it, which was around the end of last year, let me actually take a look. Yes, it was around this price point, right, to where it's at right now. It's a beautiful thing, and I'm waiting for it to get back to the 700s, and that's gonna be beautiful. That just the amount of stocks I own there, if it reaches back to that point, will be probably $150,000 worth in price value. This is where we are at right now. I just want to make sure that don't stay out of the market. Make sure you stay in. Don't panic when you see these numbers increasing, meaning you're feeling like you're gonna miss out, and you just gotta buy as much as you can right now. Buy when it's low. Keep your cash on reserve right now. We're not out of the woods yet. The inflation, it seems to be a little bit more under control, but I don't think right now is a strong indicator that everything is all good. The economy is still facing some uncertainties because of the fact that we just don't know. The wars that are happening right now when it comes to Ukraine, Russia, is still going on, as well as in the Middle East with Israel, the whole Gaza strips and the Palestinians. It's going to cause this market stir, inflict damages across like oil prices, gas prices, consumer imports, exports. All these things affect the global economy whenever you hear about these wars. And they're going to keep happening, but I think once we ease down on those things, companies stop spending excessively, like the lending stops going all crazy, then we start seeing things leveled off a lot much more better. Let's see how much price cuts, and I'm just going to randomly pick a state. Right? And since I am in New Jersey, I'm going to pick NJ. It's out of Zillow. So we are going to reset everything. There's 17,000 homes listed. Now let's see how much are actually listed with price reductions. We are at about 2K, which is over about 15%, I would say. But it's really more like 12%. In all honesty, this is not a strong indicator that we are in a home sell-off situation. So the housing economy seems to still be at a stagnant point. But if you do look at the inventory, you'll see that it has dropped quite a bit. So therefore, these are all the factors you got to account for whenever you're looking at home prices. Keep consistent when it comes to investing. Be on the lookout. Like, I'm actually about to go look at another property right now. If the math don't make sense, I'm not going to do it. I'm going to hold. I'm not going to have that fear of missing out, because there was always going to be opportunity for you to get in at the right price. If it financially makes sense, go for it. If somebody else is going into this and it doesn't make financial sense, eventually they're going to feel the burn from that. Therefore, at some point down the line, it's going to create an opportunity for you to get in, because they're not going to have the means to enter those future opportunities as they open up. People that are buying a lot of homes cash, eventually the cash is going to run out. And all this money that was sitting out from all the printing that was happening that created a lot of this inflation, it eventually has to come back into the market, so the prices of some of these assets can go back to prices against inflation, meaning like the Dow should hit like 40,000, NASDAQ should hit like close to 20, I would say, yeah, close to the 20,000 mark. We should really see those numbers really start adding up and make a lot much more sense. And it takes time. It doesn't happen overnight. So hope you found this insightful. Like, share, subscribe if you did. If you have any questions, drop it in the comments below. Peace and love, trust in Jesus. Have an amazing one.